This is Rod Kusanen for Risk on September 9th, 2014. Today we're going to give you a video that shows you some of the tremendous benefit that can come by learning to read the premium. Very quickly, on this chart we have a 1-minute chart on the Spoos, on the premium, on the ticky, and a couple of indicators. We're looking only at the raw data of the premium. That's the only thing that matters. We have established an upper threshold level from calculations of the previous day. The upper threshold of the premium is negative 0.59, fair value is negative 1.2, and the low threshold level negative 1.91. That will become relevant in just a few minutes. Now, most of our traders were anticipating a brief sell-off during the morning following yesterday's red day down. Now, I just used a term that described the pattern of the previous day. This was a red day down. And that being the case, we were expecting the lows of yesterday to occur in the last half hour. That did not occur. But when it doesn't occur, 9 times out of 10, that pattern finishes on the morning of the following day. That is exactly what occurred today, just as expected. If you didn't know that, come take our course. You'll learn how we expected this sell-off to occur this morning. Now, it wasn't a huge sell-off, but it was the completion of a pattern. But what you may not have known is that we also expected a trend reversal. That low that occurred right here at 9:41 Central Time, we expected that the Spoos were going to reverse their direction and hit a new high for the day thereafter. How did we know that? By this bar on the premium that occurred at 8:49. This new high on the premium is associated with this new high on the Spoos. This is what we call a naked bar. Now, if you don't know what that means, come take our course. That's what we teach you. And from that, you could have anticipated that the Spoos were going to come back to 1997. We can't tell you exactly when that will occur, but we would have been able to anticipate a change in market direction from the sell-off into a new high for the day. That is exactly what took place, and our traders knew that. Now, you could have also known that 1989.50 was an anticipated support level. How did we know that? Watch the next video and we'll show you how we knew that. But we also knew that the area at or about 2000 on the ES was also an area of resistance. We knew that too. And you will see that on the next video. All we're talking about here is what the premium alone was able to tell us. As the Spoos moved up to the high for the day, we hit resistance and we came back down. And guess what? We also knew that. And we knew that almost an hour before it occurred. Let's explain to you how we knew this. First of all, this new high bar on the premium forecasted a return to 1997 exactly. At least 1997 or more. Not 1996 and 3/4, not 1996 and 1/4, 1997 exactly. That's how good the premium is. When it tells you what's going to happen, you can bank on it. So you can see that that prediction occurred. But what you may not have seen is that the premium also predicted a return to 1990-50 or less, based on this bar of the premium. Low of the premium right there was 1990-50. The very next bar was 1990-75. It was not equal to the previous bar. So our traders expected this is going to come back down to at least 1990-50. Right there. And you can see that's exactly what it did right over here. 1990-50. And when that occurred, the premium was still below the threshold level, which also indicated we're still coming down. And that's just exactly what happened over the next several minutes. The premium was your roadmap to successful trading through the entire course of this day. It was all right there. And our traders, by learning how to read the premium, could have charted that well in advance. The premium is a leading indicator. It's the only true leading indicator that exists. You've got to have an accurate reading on the premium. You've got to have it from a good data vendor, and you got to know how to read it. We teach you how to do that. And once you know how to do that, you can pretty well chart what will happen before it occurs. That return back to 1997 took place at 8:49 Central Time. It didn't occur until 12:46, almost 4 hours before it actually took place. The return back to 1990-50 took place at, or forecasted at 12:10, doesn't take place until 1:33, almost an hour and a half before it actually occurred. Knowing how to read the premium is exceptionally important. And we're one of the few places in the world that will teach you how to do this correctly. Come to us, give us a call, ask for a demo. We'll show you even more than this brief video has time to explain. But once you learn how to do this, you'll never go back to something else. This is one of the keys. Learn how to read the premium. This is RSKsys Intl for Risk.